future activities in the name of budget, which is nothing but a quantification of a plan. Having prepared the budgets of different types in nature, we are comparing the budget figures with the actual things what we have achieved. That is how for every moment of our working environment, we are aiming to attain our targeted results, that is the budgeted ones. So in the process of making the comparison between the actual and the budget, and we are able to know where we are. That is how we are able to control our management activities in any business organization. Now, the other one, which is very, very useful for management control, that is variance analysis. So having compared the actual with that of the budgeted or the standard or anything which we aimed, we will identify the difference between these two. That is what is to be achieved and what was achieved. And that is going to be a difference, maybe a positive or a negative. That is a variation between these two. And that we are going to take it for the further course of action in order to make our operations very effective. So in that process, we are comparing the actual with the standard. This we can also refer it in the name of standard costing. So having identified or designed a standard costing or the standard cost, and we are doing our activities, wherein we can identify the variation. And this variation we are going to examine why, how, what is to be done in order to make it more effective. So for that, this variance analysis is going to be very, very useful control technique. This variance analysis is examined in order to identify a favorable or an unfavorable, favorable variation or unfavorable variation. Favorable variation is the actual is more than the standard. Unfavorable variation is the standard one is more than the actual one. That means we are not able to perform the things effectively. For the purpose of knowing this, what type of the variation, is it a negative or a positive, we are going to analyze by taking into consideration more particularly the cost. So here the costs are going to be take it as a base for the variance analysis approach. For conducting the various analysis, the following are the different types of the variations we are going to be assessed or considered or measured. Usually the following are the different types of the variances one can identify. And these variations are based on the cost parameters. Generally, in any product manufacturing, you'll have three broader classification of the cost. One is material cost, labor cost, and overhead cost. These are the three broader classification of the cost. In any product, you have different types of the costs. All those costs are going to be broadly classified as material cost, labor cost, variance. What is material cost? It is the cost which is spent in order to procure these materials. And this material cost is going to be again of we can subdivide into different sub items. So for the cost variance, maybe usage of more material rather than the standard one. Suppose in order to produce a product, the standard quantity is 10 kilograms. Instead of using 10 kilograms, if you are going to use more quantity of material, that is 11 kgs or 12 kgs, that means we have excessively consumed. For this excessive consumption of the material, you will have more cost rather than what the cost determined, wherein you will have unfavorable. Or it may be because of the price at which you are arranging this material. You may be purchasing the material for the standard price is, or the predetermined price is 10 rupees. You may be purchasing for 11 or 12. In such a case, the price is high, so that you will have more cost of the material. More cost of the material. That is another reason for more cost rather than what are the costs you have determined, what are the costs you have standardized. So because of more usage of the material, or because of high price at which you have purchased the material, or in some of the occasions, you may be mixed 3 or 4 types of the raw materials in order to produce the product. If you are going to make 3 or 4 types of the materials, that is, at a particular proportion, you have to mix the materials. At a particular proportion, you have to mix the materials. So instead of mixing a standard mix, standard proportion, if you mix a different proportion, wherein is also there may be possibility of having the difference in the total cost. Because if you are mixing A and B in order to produce product X, usually the proportion of A and B is 60:40. So instead of 60:40, if you mixed 50:50 or 40:60 or 30:70, likewise, if you change the proportion, wherein you can find the difference in the cost of the material also. And the other possibility of having excessive cost is yield variance, material yield. So for every 1 kg of the raw material, the standard quantity of the output may be 0.75 kgs. Because of the problems in your process of manufacturing the goods, or because of your carelessness, or because of your inattentiveness, I think the yield may be less than what the standardized yield. Wherein also I think you may have the difference in the total cost. Therefore, the material variances may be because of material usage variance, material price variance, or mixed variance, or yield variation, or the cost variation, which final results your actual cost is more than the standardized cost. That is how you can identify what is the reason for this variation in the cost. Is it because of the more consumption of material, or because of the difference in the price at which you have purchased over your standard price, or because of the variations in your proportional mixing of different types of the raw materials in order to produce the product, or there is a yield differences. So because of these things, you may have the material variance. So in order to control the production process, you have to compare your actual with that of the standard material, standard cost. And this variation may be because of the price, because of the usage of the material, or because of the mix of the different types of the materials, or because of the difference in your yield. And all these things may be having a difference in your cost. So in order to control this variation, or to make your actual with that of the standard, you have to diagnose which one is the causal factor for having these variations. So likewise, you can also analyze the labor variance. Labor variance means the man hours you have used, the wage at which you have paid the wages. So likewise, you may have some variation in your labor component also. And the third very important segment for this cost of manufacturing is overheads. Other than material and labor, all other related expenses, we are going to refer them as overhead expenses. Even in case of this overhead expense also, I think you may have the variations of different in nature. And before you are going to control the cost, you have to identify which one is the causal factor for having this variation in terms of material, in terms of labor, in terms of the overheads. So this is how one should analyze the reason for having this variation. And in your study material, I think you have provided the various details or the cost calculations, like material cost variance is standard cost of materials for actual output minus actual cost for materials used, or materials price variance plus material usage variance or quantity variance. That is how you have different equation form information through which you are able to identify or to measure or to calculate which one is the causal factor or the root cause for having this variation between the actual and that of your standard one. So the cost accountant is going to help you in order to identify which is the root cause for the variation for your cost control. So next to this one, I think you may have material price variance. What is the actual standard price and the actual price? By comparing the actual price with that of the standard price, for your actual material used, you can get this material price variance and material usage variance. What is the standard price? That standard price may be 10 rupees. And what is the actual quantity you have used and what is the standard quantity? So standard quantity minus of actual quantity multiplied with the standard price. You can get the material quantity variance. Then material mix variance. And material variance, yield variance. Likewise, you have different components of this material cost variance. Try to quantify how much is the difference between the standard cost and the actual cost. Because this cost consists of either it may be excessive usage of the material or excessive price you have used in order to purchase the things, or the mix variation, or the difference in your yield, may be one of the reasons for this cost variance. So next to this material variance, labor variance. This labor variance can be explained or can be analyzed because of labor cost variance, labor rate, that is the pay rate, pay wage, labor efficiency variance, efficiency or idle time or gang composition variance. That means the different types of the skills composition or labor yield variance, the amount of the productivity. So these are the different types of the variations in the name of labor variance. That is labor cost variance, labor rate variance, labor efficiency or idle time variance, and labor mix variance or gang composition variance, and labor yield variance. There are the different sub items under this labor cost variance. And next to that labor cost variance, overhead variances. These overhead variances may be variable overhead variance or fixed overhead variance. And even these fixed variance overheads and the variable overhead variances may also lead to the variation in your overhead costs. So this is how you have to analyze why there is a difference between the standard cost, the standard price, the standard quantity, and the standard yield with the of the actual yield or the actual price or the actual usage or the actual mix of the material. So between the actual and the standard, you are able to identify why there is a difference. This difference is because of the price, because of the quantity consumed, or because of the yield, or because of the mix. I mean the composition of these three types of the broader cost, that is the material cost, labor cost, and overhead cost. So having analyzed, you may be in a position to know how we paid more price for purchasing the material, which leads to excessive material costs, or because of the excessive quantity consumption for producing of the goods. With that, there is an excessive cost, or because of not able to maintain the standard proportion. If you mix the different items in order to produce the final product, maybe there is a variation in, or maybe there is a higher cost because of the mix what you have not followed in your standard mix with an identified proportions. So that is how just you can analyze the reasons for this excessive cost. So having analyzed the reasons for the excessive cost, you are trying to control in the next time or make your assignment or the activity very effective. So other than this material cost, labor cost, and overhead, you may have another area also in order to know where we are lagged behind over your standard. That is another area is sales variance. Your targeted are the stand and your planned sales are some 1 lakh tons. Instead of attaining 1 lakh tons of 1 lakh goods of the sales, you may have less than that one. So that is the negative variance. Your performance is not up to the standardized one. Hence, what are the reasons for that unfavorable sales variance? Either because of lesser sales, or because of the price is less than your aimed price, or if yours is a multi-selling organization, is there any disproportion of different types of the goods you are able to deliver? Which one is the reason for this sales variation So likewise, one can analyze the variance analysis for the purpose of controlling your business activities. That is the management control activities. So in practice, the variance is generally because of the time, because of the margin, because of evaluation of standards, are not able to identify the correct standards. Maybe one of the problems you will come across while you are analyzing the variance or the variations. So keeping in mind, we should always aim at how best we can produce. As and when if you are not able to get your standards to be achieved, then you have to analyze the reasons for the variation, unfavorable variation because of the material, because of the labor, or because of the overheads, or in some of the cases, you are not able to deliver what you are supposed to deliver, that is because of the sales variation. So having analyzed these variations in the name of variance analysis, then you have to report this information to the management. You have to report the information to the management. Unless you are going to report, how the management is able to make it correction. So for that, you have to report for make it as a process of controlling the activities. Process of controlling the activities. And this reporting is mostly in the name of reporting to management. Reporting to management. And you will have different types of the reports. And it may be just information reports, or it is any analytical reports. The report what we have discussed so far is going to be arranged in the name of analytical reports. You have analyzed the reasons. That is in the name of analytical reports. Or operational reports, only your production activities, your marketing activities. There are all the operations we are going to conduct, and whatever the information we have collected should be arranged in the name of operation reports. Product reports, that is product-wise reports, industry-wise reports, department-wise reports. There are all the different types. It all depends upon your nature of the information we are going to be collected and report to the management. Maybe it is product-wise. If yours is a multi-product organization, if yours is a different departments, department-wise, or it may be belongs to a particular industry. Then progress reports. Progress reports is always a horizontal type, vertical type. Every monthly, what is the amount of the progress over the period of time. Then internal reports. The reports are exclusively for management, just in order to make a correction of the activities. Or external reports, the various external parties like investors, prospective investors, shareholders, customers, suppliers, income tax department, or your competitors may also ask some of the cases. So there are all the various external reports. So in order to satisfy the interest of these parties, we are going to arrange this information in the name of reports, and those reports we are going to refer them as external reports. Vertical, that means over the period of time. Then research reports. I think most of the organization, they are going to conduct the research, and the information what they have collected is going to be reported in the name of research reports or project reports. So for every project, what is the progress of the project, when should we start, and when it is going to be completed, and what are the various activities involved in here. And these are all the various things which are related to the project reports. And there are certain of the reports which are mandatory. Those are statutory reports. So every business organization has to prepare and get them audited and certified with a competent certifying agency and submit to the annual report, annual general body meeting, so that you can move for the next year's business. That is the statutory. There are certain other reports which are statutory in nature, should be prepared and submit to the concerned authorities. Otherwise, you cannot go for the next year's business. Those are statutory reports. So likewise, you have different types of the reports. Of course, here the variance analysis, it is only for your internal purpose for the management in order to take them corrective actions. We are going to submit this information to the management, which is going to be one of the types of the report that is in the name of internal reports. And it may be also a progress report. And it is also some sort of an operational reports. So these are the type of arrangement one should arrange in the name of reporting what all the operational details you have undergone should be reported. And these reports may be a vertical report or short-term report or a formal report or informal report. Likewise, I think you can prepare the reports in various ways of submitting the information also. And the most essential, the feature one should keep in mind while you are reporting this information to the management is, that means the following are the features one should find in your report. This should be in a proper form. The report should be in a proper form. That means the style and the layout of the report should be keeping in mind the users of this information. And if necessary, you can also make use of the statistical tabulations in order to present in the form of graphs or pictures, through which you can infer the information quickly with your naked eye, rather than explaining in a very elaborate way, that is a descriptive form. All the times, I think this descriptive form of the information may not be much helpful unless you are going to arrange it in the visual form. So here, the proper form of the information is keeping in mind the user's point of view, how effectively, how easily we can deliver that information to the various of the parties who are going to make use of this information. And time is also very, very important while you're reporting this information timely. If there is any delay in providing that information, by the time I think there is no scope to make any corrective action. Hence, timeliness is also very important. One of the good features of a reporting system. The flow of information should be always keeping in mind from the right level to the authority. The information should be very systematically maintained as a proper flow of information. So in order to take any corrective action, I think you must provide this information very clearly, legibly, transparently, and accurately. Then only you can take the action very effectively. And flexibility is also important in your reporting. If necessary, just you can modify or adjust according to the requirements of the user. The production manager mostly, he always used to keep in mind is the division or the area of the control. If you are going to provide keeping in mind the whole organization, in such a case, I think it is very difficult for an individual department to make use of this information. Hence, in your reporting, it should be very flexible. If necessary, just you can turn it out and just according to the needs of or according to the requirement of that particular user, you can easily modify and incorporate if any information that is out. It should not be in a rigid form, it should be in a very flexible form. And this information should be very suitable for making any evaluation. It facilitates of evaluation. A good reporting system should give information required for the evaluation of each manager's area of the responsibility in relation to the goals of the organization. That is also very important. And the economy. There is a cost for rendering information, and such a cost should be compared with the benefits derived from the report or loss sustained by not having a report. So while you're focusing your attention on this reporting, it is not free of cost, but at the same time, should also see how economically I can provide this information in the name of the reporting. And don't spend too much of the money, because this heavy amount of the cost on this reporting does not serve the purpose for which you are going to aim at in your business organization. And so having known the different features of which should be keeping in mind while you're reporting this information to the management for taking of any corrective action from out of the deviations, and what are the various modes of reporting. Modes of reporting is different ways. One is the written statements. Written statements, that is the formal financial statements, or the budgeted budgets, or your tabulated statistics, or through accounting ratios also. We can submit this information in the form of a written report through tables, through graphs, through the description, or by making an attempt of establishing the relation between two numerical values in the name of ratios. So there are all the various ways how you are going to provide this information to the management in the form of reporting. So likewise, you may also follow graphical presentation, graphical reports. Graphical reports are the reports wherein we are going to present this information in the name of graphical pictures, or through charts or diagrams, through which also I think you can very easily grasp what is the actual thing in order to make any correction. And the other one is oral reports. In some of the cases, you can ask and to submit orally what was happened in your organization, wherein I think oral presentation, oral reporting is also very much useful to make your actions for the correction of the deviations. But whatever the mode it may be, whether it is going to be a written or going to be a tabular form, or it may be a graphical representation, or a oral report. And the basic requirements for these reports is promptness is very, very important. Promptness. Then form and consent. And it should have a good form and consent. Besides that, comparability is very important. Comparability. You can have the comparison between two, or your last year's performance out of the year, or you can also compare with your neighboring organization who is your competitor. And in your reporting, it should be consistency, and it should be simple, controllability, appropriateness, cost consideration, and accurate. So there are all the various things which should be keeping in mind as the basic requirements while you're presenting your information. And the reports are broadly categorized into external reports, internal reports, routine reports, and special reports, operating reports, and finance reports. Likewise, also you can categorize the different types of the reports. And external reports. These are all the various published statements. Maybe your published finance statements, or the shareholders, or bankers, or for finance institutions. These published statements are going to be helping a lot in order to make their decisions or to make their relations with the organization. That is comparative statements, which is going to be used by your neighboring firms or the governmental organizations or the various wings of the government organizations. Then internal reports. Internal reports are for management to middle management to junior management to top level management. So in order to satisfy for taking their own decisions, I think this internal reporting system should also very thorough. Then routine reports. Routine, just we are preparing the budgets, routine, the variance reports, routine, and those are all the routine reports. Special reports, just these special reports are in order to conduct any inquiry on some allegation, wherein we will come across the special reports and operation reports. Generally, these operation reports are broadly divided into control report and information report, finance report. So this is how you can come across different types of the internal reports in the organization. And finance reports, you may be knowing funds flow statement and funds flow analysis and cash flow analysis and your working capital reports. And these are all the various reports which are going to be financial in nature. All your financial statements information and preparation of your cash flow statements, funds flow statements, and these are all the reports which we are going to play in the name of finance reports. And these reports are very, very useful to the management, as the actions are going to be based on the quality of the information and the timeliness of the information and the precise information which helps you in order to make your activity very effective. That is how there should be an effective reporting to the management on the various activities which were happened or performed in your organization. Based on your reporting only, the management is going to take the corrective action on the deviations, if any, so that you will have very effective control system. But this reporting is very, very important. Not only the analysis, but what is the performance should be reported to the management, which is a very significant aspect in controlling the various managerial activities. So here it is not out of context to discuss which reporting is more effective and what considerations or factors are the things should be keeping in mind while you are reporting. So first of all, you must have what is the objective in reporting. First of all, you must decide the objective. Why this report? To whom should we submit? What is the purpose of it? What is the outcome of the submission of this report? So for all these three aspects, you should have the clarity in your mind in the name of what is the objective in submission of this report. The next one is you must understand who are your audience, to whom we are going to aiming for submission of this information. If you are going to submit this information for a more appropriate or the concerned people, it has its own result. If you are going to submit this information for an executive or the people who are not consent to that activity of no use. And it should have a clear objective and clearly understand who are your audience. Then the report and type is also very, very important. The content of the report is very important. The structure of the report is very important. So that's all how we can say it is a qualitative report. That quality consists of the timeliness, the structure, the facts, and the type, and the format. So there are all the various features we should see in your reporting. Then the report must be in a readable form. Readability is also very, very important. If necessary, it should have the editing, edit. You can also edit the things. The draft, what you have submitted, if necessary, you can also make some corrections or to incorporate some more data. So hence, editing is also one of the features which we should maintain while you are reporting this material. And keeping in mind all these features, one can say this is a good reporting. And the requirements for a good reporting, finally, it should be in a good form. The content must be very relevant and clearly expressed, up to date. And it should be very simple to understand. And it is a timely report, which helps you in order to take a quick action because of these various features of the reporting. It should be relevant and consistent, accurate and factual, controllability. Above all these things, economical and comparability and the frequency of reporting, decorativeness, clarity of the information, and it should be very brevity, pakka organized, and it should be properly addressed to whom we should, and it must be duly signed with a date and also the terms of reference. These are all the various features of a good report. If you are able to maintain these features in your reporting, it has a meaning and relevance, and definitely there is so much of the impact on your work performance because of the relevance, and it should be correctly aimed, not to take the actions for any deviations. So these are all the various things which you have to keep in mind in your reporting. That is one of the important phenomena in your management control system for having the analysis on your variations. And the next point which we should discuss under this, in this context, in this block, is performance evaluation. You must evaluate the performance. Not to analyze, but also you have to evaluate. This evaluation of the performance is going to be in order to appraise the performance of your employees, the performance of your sections, or the departments, or the heads of the organization, one of the different centers. The performance evaluation is very important in order to recognize their talent, so that you can influence or to motivate to improve their performance also. So for that, you have to evaluate the performance. The performance evaluation is going to be through various multiple criteria. The performance evaluation criteria may be a balanced scorecard, or through a contribution margin approach, or by calculating the return on investment, or residual income, or economic value add. These are all the various criteria you can follow. It all depends upon the nature of your organization. You can go for an evaluation through a balanced scorecard approach, or you can also identify, or you can also measure their contribution, or what is their result in terms of a return on investment, or what is their residual income, what is the economic value added as a particular activity. So through these criteria, I think you can evaluate the performance of the organization, or the individual, or the section, or a branch. So by evaluating their performance, I think you can also motivate for further improvement, if at all, if there is any possibility. And you can also influence, or you can also motivate them to increase their performance, provided if you are going to say what is their performance. And this is also one of the important area for achieving your aimed things, for which you have to make your attempt in the name of control the various activities. This is also one of the important area of management control system. And usually, in terms of the financial criteria, we should always aim to know what is their return on investment. Suppose while you're investing your money, first of all, you want to know what is the return on investment. What is the amount of the benefit I am going to be received on this amount of investment? If you are able to know what is your probable return on investment, say for example, the ROI is going to be 16%. Okay. So in order to get 16% of the return, what is my cost today? At what cost of interest should I borrow the money? Suppose if your borrowed money is going to be used in order to get 16% return, the cost of those funds must be less than that. There should be some surplus. If the cost is more than the amount return, I think no wise man is interested in order to venture that particular activity. Hence, you must know what is my return on investment. So the calculation of return on investment is a must before you are going to take your financial decision. What is my probable return? As long as I am going to get the return, which is more than my cost of investment, yes, I can proceed further. If your actual return, if your probable return is going to be less than the amount of the cost of your funds, no fool is going to venture such type of the activities. For that, I think you must measure what is my return on investment. So likewise, what is my turnover, assets turnover? Assets turnover is your sales income divided by the amount of investment on your assets. This is going to be used in order to know what is the earning capacity of my investment on assets. That is for a layman understanding, what is the amount of the return which I am going to be earned for every rupee of investment on assets. That means every rupee of my asset is going to produce this much of the benefit. So that is also one of the indicators or the variable through which you can assess your performance. And in the absence of not knowing the per rupee investment return and the return on investment, and you may also aim to know what is your market share. This is also one of the performance evaluation indicator, market share. Market share is your amount of the business in the total market. Say, for example, there is a demand of 100 units of a particular product in the market. Out of these 100 units, how many units you are contributing or how many units you are supplying? Suppose if your supply is 60 out of 100, that means your market share is 60%. In the total market, you are contributing, you are providing. Your contribution share is 60. That means you are a dominating one in this market. Or your market share is only just 10%. So you will have less influence of the market. So this is how, to what extent I can influence, to what extent I can satisfy the demand. What is my market share? That is also one of the indicators to evaluate the performance of the business. And that way you can assess, evaluate the performance for knowing where I am and to what extent I can further improve my performance. So for all these things, I think the evaluation and the criteria for evaluation is very, very important. Through this, you can assess the performance of the organization on the whole, and also department-wise or the section-wise or branch-wise also, you can have the comparison of the performance evaluation within your organization, so that to whom should we give the promotion, to whom should we give more thrust or the concentration for further improvement of the business, is also your focus or attention while you are evaluating these evaluating the performance of your organization. So for a layman understanding, I think this is how you can also evolve a criteria for evaluation of your performance of the department-wise, product-wise, or section-wise, or the individual-wise also. That is what is your contribution to the total business in terms of the revenue generation, in terms of market share. That is as a whole. Or you can also assess the performance of your employees in terms of labor productivity, or unit material cost, or man days lost. The lowest man days lost is going to be the good performance indicator. And what is the amount of the capacity utilized? Suppose the installed capacity is 100. Are you able to utilize the installed capacity fullest extent, or only 90%, or 80%, or 60%? The higher the possibility of making your exercise to make use of the total capacity installed, you will be a very effective utilizer. And what is the percentage of scraps and defectives you are producing? The lowest is the percentage, the highest is the performance. And how many hours of the breakdown of your machinery? The lower the time, the higher the performance in terms of breakdown of your machinery. And what is your idle time? The lower the idle time, the more the performance. And what is the unit cost you are spending for manufacturing of your products or the services? So this is how you can evaluate the performance of the different sections of your centers, of your branches, of your product wise. You can assess their performance and make them give the motivation of the encouragement in order to improve their performance, and also to give the due recognition in the name of awards and rewards. For all these things, I think this evaluation criteria is going to be very, very useful. Unless you evaluate, I think you cannot control the various activities of the business. So this is how the evaluation criteria is also much more useful for making your activity more effective in the name of management control. So to control the activities, I think there are all the various variables or the criteria one can adopt. And you can also assess their contribution approach. Contribution, what is, say for example, there are multiple products you are manufacturing. So for the overall success of the organization, what is the contribution of product wise or the branch wise? What is your contribution? So that contribution may be sales generation contribution, or maybe profit making contribution, or maybe even you are able to minimize the expenditure. That is also a positive signal for improving of the the contribution of the overall performance of the organization. So this is how you can make use of the appropriate criteria for assessing the performance of the different products or the branches or the individuals also. And you can also have the divisional income approach for calculating of the performance of the organization. So unless you evaluate the performance, you cannot make them recognized for any awards or the rewards, through which I think you can influence, you can motivate them to increase their performance further. And all these things will definitely increase the performance through your control mechanism by way of approaching these things. And with this, I think you can also identify the strengths and weaknesses of the different departments and how they can be improved further the performance. So through this economic addedness, residual income approach, and the divisional performance approach, there are all the various criteria one can follow in order to improve the performance of the organization. And that is how just you must make an effective role to control the various activities. So this performance evaluation is also one of the important areas in order to make your control system or the mechanism very effective. And this information should be rightly, timely, and promptly you have to submit to the reporting authorities for make their attempt to correct the things. So with this, on this block 4, in the name of variance analysis and reporting to the management, the variance and criteria evaluation of the different dimensions, which helps you to make your management control system very effective. So this is block 4. So now I would like to know Mr. Kumar Swami. Mr. Kumar Swami.
Sir.
Mr. Kumar Swami.
Sir, good afternoon.
Are you able to follow me?
Yeah, yes, sir.
Okay, with this block 4 almost over, except one more unit, that is the management audit. In the next session, maybe you are having 2 more classes in the next Saturday and Sunday.
Yes.
We will meet and we will complete the discussion on the unit 5. That is the special case of this management control system as a case study.
Okay, sir.
Okay.
Okay, sir.
Shall I stop my discussion because the time is up?
Yeah, sure.
Okay, thank you, and we will meet in the next week.
Yeah, sir. Thank you.